All right, hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wong, your host. And I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's ProDesk virtual trading floor. Before we get into any market-related discussions, here's just a quick disclosure of Derrick's positions as of our recording here today on July 27th, almost here at the end of the month. Derrick, um, so, Derrick, how's your Monday going? You're long, as we can tell. SpaceX still remaining just your one short. So, how's the Monday?
Pretty good, pretty good. Honestly, it's same story as I feel like you and I have spoken about for a couple of weeks here. It's like, sure, the Qs are down this morning, but that means that the semiconductors are down, and that means that I'm red in my semiconductor longs. But because the Qs are down and because the conductors are down, software, the IGV ETF is up almost 4%, and it's at intraday highs right now as we're having this conversation. So it's like, yep, I'm down a little bit of money in SMH, I'm down a little bit of money in SOXX, but I'm up really good money in Microsoft, in Path, and ESTC, and Google, and all these other names, where net, even though the market's not doing too much, that constant rotation underneath the surface, trimming things when they move higher, adding to things when they move lower, just honestly continues to pay, and that's where we're at.
Yep. All right. The title of our stream today is MAG7 earnings plus the Fed because, wow, it is a busy week this week. We had a fewer bigger reports last week, but otherwise it was kind of a quieter week for the market. But this is anything but a quiet week for the market. So let's start on the earnings front. The calendar is absolutely jam-packed this week. A lot of the focus being, of course, on Wednesday and Thursday. But some reports after the close today as well with Applied Digital and Amcor and Nucor, things like that. Then Tuesday, we're getting KLA, Seagate, Boeing, Corning, UPS, lots of names. But Wednesday, Thursday, again, being the big days. So Microsoft and Meta on Wednesday after the market close, Qualcomm as well that day, Lam Research as well that day, and then Apple and Amazon after the close on Thursday. So when we're coming into a big, huge week like this for earnings, how do you navigate a week like this as a trader?
Sure. So, how do I navigate a week like this as a trader? I have to understand what companies are reporting and what the impact is of those reports on any swing positions that I may have on. Sometimes I'm directly swinging a stock into earnings, like I will most likely be swinging some Microsoft into its earnings report. So very clearly and obviously that's going to have a direct effect on my P&L. But you also just need to understand how what's so important right now is the story of the hyperscalers versus semiconductors. How are they spending? Is there any issues with the underlying story of the semiconductor strength and the AI trade, which has just led to all of the market's gains this year? And the answer to that so far is that, in my opinion, there's been no problem. Google got hit down on its report. The report was fine, pretty much a small beat across the board. But the market didn't like the increase in the CapEx spend, so they hit Google down. And that's to be expected, honestly. But what that's not bearish for is semiconductors. And then you had Intel report its earnings report, and they sold Intel down, but the report was just fine. So assuming that stays the same this week, which is definitely an assumption, maybe we see something out of Microsoft, maybe we see something out of Meta, that leads the market to believe that CapEx spending is going to slow down, in which case MAG7 names will probably move higher and semiconductors move lower. But until and unless we see something like that, I have to think that any pullback in the semiconductors is really just still a positioning wash, and therefore eventually leads to a buying opportunity. So that is where we're at, and we're going to wait to see what these important earnings reports tell us about the most important story to the stock market and the economy.
All right. So when it comes to these big reports this week, which one or which few, if there are multiples, are you the most focused on as a trader? I'd say Microsoft.
Yeah, I was going to Microsoft just because I'm going to be holding some in the report, but Apple, Amazon, and Meta are also really important. In some ways, Apple is probably the least important, which is important to me because I've been super bullish on the stock and I want to, see what the story looks like. I said when this thing was at like $290, I thought it was going to go to 340. Today's high is 339 spot 57, so that was a pretty darn good call. Whether or not Apple can continue this incredible run that it's been on will heavily depend on the report. But Apple's report doesn't have as big of an impact on the overall semiconductor AI story as Microsoft, Meta, Amazon, and Google obviously do. So those reports are probably more important to the market, but the Apple report is still going to be interesting. And obviously, Apple's such a large market cap company. It's got a really big impact on the S&P and the NASDAQ as a whole.
Obviously, another big catalyst for the market this week is the Fed meeting on Wednesday. So Fed has been in their blackout period leading up to this meeting. So we haven't heard from any Fed officials over the past, what is their blackout period? I think it's 10 days ahead of the meeting. But I mean, the market is typically pretty right on what we're expecting. It's just always about the press conference and what the chairman says and what we can read from that, et cetera. Right after the Fed meeting, we get the PCE price index on Friday as well. So there'll be new inflation data, and then that's their favorite inflation data. So with those two pieces coming this week on top of the earnings calendar, what do you think? What do you think about that for this market?
Sure. So we still have a new Fed chairman, and the new Fed chairman is doing things different, right? The market continues. I'm not sure what the latest odds are, but the market does continue to price in at least some percentage probability of a hike occurring this week. I've been saying for over a month now that I don't think that that's going to happen. I continue to say that I don't think it's going to happen, but it's very different than Jerome Powell. Jerome Powell, if we were less than a week out of a Fed announcement where there was still a lot of uncertainty, you were usually seeing an article come into the Wall Street Journal from the person that they referred to as the Fed whisperer, who most likely was being fed information, fed information from the Fed, fed information from Jerome Powell on what they were going to do kind of ahead of time, because Powell didn't want to overly surprise markets. Warsh has specifically come out and said the opposite, that he wants to return to a little bit of the old school ways of having some secrecy around what they're going to do and not telegraphing everything. So we haven't had a Wall Street Journal article come out to further confirm that we are not going to be getting a hike this week. So, you have a little bit more uncertainty going into this report, and uncertainty is actually what creates movement. So we might eventually, I don't know if it'll be for this time, we might eventually be getting bigger swings in the stock market on Fed days because things are a little bit less telegraphed than they used to be. So that is potentially exciting, and we'll see what he does. The big chatter is, or has been, is Warsh being basically forced into a hike by the market itself. The TLT has been crumbling. Interest rates have been moving higher. A lot of that is a result of the fact that inflation is still too high, which is a result of the Iran war / tariffs / some degree of how expensive memory has become with the AI spend, which the AI situation has been inflationary in nature, at least in the short run. The technology probably in the long run should act as a deflationary impact, but in the short run, at least in the build-up process, the creation process, it's had an inflationary impact. So that's been the big question: is Warsh's hand going to get forced into a hike? And I still think no. And then the fact that we're getting a little bit of relief on interest rates this morning as a result of a little bit of a calming down of the Iran situation over the weekend, again, at least for the moment, probably further indicates that Warsh's hand is not going to get pressed into a hike this time around. So I'm pretty confident that we are going to see no hike, no cut. The interesting thing will be, are there any dissents to this internally within the Fed? Do we see anybody come out and publicly dissent against Warsh in favor of a hike? So that'll be interesting to see or not. But yeah, that's where we're at for it.
So obviously in your positions disclosure at the beginning of this, you have a lot of longs on. When you and I talked last week, you were bullish this market. What's your stance right now?
I'm still bullish. I mean, the S&P is almost in the exact same spot that it was when you and I were talking a week ago, maybe down very, very slightly from that. So we're still building up. Yeah, we've been in a range now for 3 months. We continue to be in that range. Technically, that range is bullish for the market. The only things that I can see us breaking down on that range from, at least in the short run, would be, like I said, some sort of a chink in the armor on the AI trade that really forces things to roll down and increases correlations. I am getting a little bit more concerned as the summer drags on. For paying close attention to the market dynamics and the positioning and seasonality. Seasonality, you run into some rough waters starting in mid-August. That mid-August to mid-September period tends to be pretty tough in the market. July tends to be super bullish, but July here is ending this week. It's over. So I am actively becoming a little bit more cautious just from a seasonality and dynamic perspective. But I think that the underlying fundamentals to this market are still bullish. So it's just a matter of, do we need to have a bit of a broader positioning wash? We have had a semiconductor positioning wash, which I actually think is bigger picture bullish over the course of the last month or so. But that has not given away to a positioning wash that's more broader for the stock market. So if we could see correlations increase a little bit on the way down, if you can see some of the systematic sell triggers from the CTAs get hit, especially if that coincides with like an August OPEX period, then all of a sudden you could see a deeper correction in this market. You could see this range break to the downside. But one step at a time. We are in a range. Know your support levels. Know your resistance levels. If the support levels start really breaking, well, we have to recognize that this market is breaking lower and manage risk on longs and put shorts on and hedge ourselves out accordingly.
Obviously, it's difficult at the beginning of a week like this to really put on new positions when we have so many catalysts coming later this week. But what would be some of the setups you'd be looking for post earnings that would get you into a trade after some of those earnings?
So that's really hard to say without actually seeing what the earnings report looks like and what the reaction to it is. But that's the biggest thing that I'm paying attention to is, what do these reports say and what is the reaction to them, and does that create some sort of a tradable setup for me? I don't love trading right in front of earnings reports. Like, I really liked Apple long on Friday. I didn't personally take it. I just thought it was just a little bit too close to the earnings report. So anything that I'm doing in front of an earnings report or in front of earnings season is just going to be more like singles and doubles, micro scalping. Like we scalped some longs today and at the index level near lows, and for some of the semiconductors near lows today, just for like little trades. But that's all those are going to be, as little trades. They're not going to become new bigger picture positions for me until we get through these reports. And for anything I do after, it's going to be analysis of where are we gapping to, what do the technicals look like, how am I reading this report, and then taking it from there.
You and I will have a lot to talk about next Monday after those reports are done, for sure.
I think so.
Yeah. I forgot what I was going to ask you. But oh my gosh, wow. Had a great question to ask you. And then it just.
It's all right. If it makes you feel any better, I just spilled.
Oh no. So anyway, I know. So on earnings, big earnings days like that, obviously those huge reports are coming after hours. How active of a trader are you in the after hour session, or do you really wait for the next morning for things to settle and see where the open happens?
Sometimes I'm very active after hours. Google after hours, I was super active for the first hour and a half, probably from like when they reported till 5:30, 6 o'clock. Really, really active in trading it. So it depends. If I am swinging something into a report, like I did with Google, like I will be with Microsoft, I've got a very specific game plan for how I'm going to be trading that. So I'm going to continue to trade that pretty much immediately after. And I've got not different game plans. It's kind of all one game plan, but within my giant game plan for how I'm going to hold Microsoft into earnings, I have what I'm going to do if it goes down, what I'm going to do if it goes up, and what I'm going to do if it basically goes sideways, and how I'm going to trade it in each of those different situations. So it's already preset those game plans before the actual reports come in. And when I do that, I tend to be very, very active in trading them and kind of managing my position around what that preset game plan was. For anything that's newer after hours, it's a lot of tape reading initially. I'm reading the tape. It's one of the few situations where tape reading, that old school technique, still really is important and really comes into play. Otherwise, tape reading is like a useless art, in my opinion, at this point. But there are a few exceptions, and immediately after an earnings report is one. The tape tends to just trade really pure. You can really see and understand the buyers and sellers in level 2 in the tape, and kind of trade that price action as you see it. So yeah, that's what I'd be looking for.
All right. Any final thoughts you want to share with the audience here as we head into the big busy chunk of this week, the next 3 days?
Not really. It's just, I'm just trying to keep a close eye on the story of these semiconductors, and so far everything I'm seeing is holding them intact, but the market for those names continues to be weak. So I think it's just a little bit of an ongoing positioning sell-off. The move that we had in the semiconductors from the March low to the June high was historic in nature, and it just takes a long time for that kind of positioning to unwash. I had seen, I forget which bank it was, which analyst it was, came out with some information just on like the levered ETFs in the semiconductor space, and basically said that you would need another 3 months of volatility to fully finish unwinding just like the excess leverage that kind of came into that space. So that's what a positioning correction looks like. That was assuming that the market was going sideways. And the market has primarily gone sideways, but the semiconductors have also pulled back. So that maybe helps to unwind that positioning situation a little bit faster. But it just shows you how kind of crazy things had gotten by the time we had topped out in the semis, and that needs to unwind before we can get continuation. But the bottom line is that these things are cash machines, and one of the things that just makes me really bullish on them is just how much cash these things are going to continue to return to shareholders. I think that we haven't even really started yet, honestly, but we're going to be entering a period where companies like NVIDIA, companies like Micron are just going to buy back so much of their stock. I saw an analyst note like a week ago for Micron specifically that it's got certain, it's got to get past the end of this year. But once you get past the end of this year, I think Micron can start announcing new buybacks. And based on the cash that they're bringing in, I think it was UBS estimated that Micron could buy back 40% of their tradable float by the end of 2028. I highly suggest that someone fact checks me on what those numbers were and which analyst it was, but it was something in that realm. And buying back 40% of the tradable float over the course of a couple of years, can the stock go down? Sure, it can go down. But you know, I don't think that you're ever going to see Micron trading at $250 again.
All right. Derrick's a real trader, and I'm going to let him get back to that. But if anyone liked what he had to say here, oh wait, okay, we got one question before I'm going to let you go, Derrick, and then I'll let you go. From YouTube saying, hi, Derrick, are there any semis or tech names that you will be looking to take positions in if we see a substantial pullback in the months ahead?
So I already have positions in SMH and SOXX and NVIDIA, and I'm going to continue to add to those positions. I've been hesitant to do anything newer, bigger picture, just because it's already a lot of exposure. I do overall still really like AMD. I'm seeing AMD is below $500 today, which is not the best technically, but that might be my favorite that I'm not in is AMD. So I will certainly be keeping an eye on it.
All right. Okay, now I'm going to let you go, Derrick. If anyone is interested in working with Derrick and his team, you can go to t3live.com/DOLive. Again, Derrick is the head trader at T3 Trading Group, and everyone who works with the firm there works with Derrick and his team of professional traders inside the ProDesk virtual trading floor. They're all there trading together every single day. So again, that's t3live.com/DOLive. Derrick, have a great Monday. Hope it's an exciting week for you and the team, and you and I have a lot to talk about next Monday after these reports.
Sounds great, Greta. Thanks again.
All right, bye.